Okay, we're going to go ahead and get started. My name is DJ with Cael Realty, and thank you for your time today. It's been valuable. I appreciate you giving us a few minutes of your day, and I promise that this will be hopefully really valuable. At least I believe it to be valuable. We have a lot of our brokers on the call as well, or the webinar, as well as brokers from other firms. So for the benefit of the brokers who aren't with Cael Realty, please indulge me literally 2 minutes to talk a little bit about Cael Realty, and then you are not here to listen to me, so we will move it swiftly over to Jim at LoanDepot to talk about renovation loans. But let me do my pitch and we will move on. So let's talk a little bit about Cael Realty, just in case you're not aware of us. That's me. It's an old picture, so forgive me for that. I'm just going to talk a little bit about what Cael offers brokers. I've been basically talking to brokers, encouraging them to look at Cael Realty for about 7 years. We're at this point, we crossed over 500, and I think we're at 519 brokers as of this morning. So about 3.5 years ago, we only had 10 brokers. So we've grown quite a bit. Let's talk a little bit about us, and then I promise I'll shut up and move it over to the reason you're here today, which is to learn about renovation loans. A little bit about us. I won't go into our history. We've been around a really long time. But at the end of the day, what are we all about? Our mission is really quite simple. To compensate you fairly. And it's not just to compensate you fairly, but if I had to choose one sentence that probably encapsulates what we believe, what we do, I suspect that would be the one. And can someone also just send a quick chat to let me know they can see these slides? I think you can, but I just want to make sure before I get further along, perfect. All right, thank you. All right, let's start more of our mission, and hopefully the people that are at Cael on this call would agree, but it's also, of course, to provide the best possible service to our brokers. And that includes, of course, cutting edge technology, support, as well as our, there we go. And of course, top level technology. So somebody snuck in there as presenter. I don't know how they did that. That was impressive. So anyway, let's move on. A little bit more about Cael. Very simply, what we're all, talked about compensating brokers fairly. We call ourselves 100%. It's not exactly 100%, but close enough. And what does that mean? Well, basically, when our brokers do a sales transaction, we only take $325, no matter how large the sale, whether it's a $200,000 sale or $20 million sale, we take $325. You get every other penny. It's that simple. If you end up doing any rentals, of course, totally up to you. Some more brokers do, a lot of them don't, but we pay a little differently there. You get 80% of the commission, and there's a little $15 fee on top of that. But sales, $325, you get everything else. Rentals, we get 20% and $15. Pretty simple. And just in case you're not at a firm that's offering this kind of commission structure, and please, you owe it to yourself to consider it, because if you just look here, I just made some really simple numbers. You can see our minus $325 on the right for the same type of transaction. Some people are at 50% commission splits, which to me is pretty difficult to understand, but it certainly is out there. And if you want to earn more money, consider a firm like ours. And just real quickly to go over them one more time: $325 per sale. We talked about rentals. We do have two other fees, which one's a monthly fee, which pays for our stuff, right? Our technology, our support, our trainers, and all of our brokers pay $49 a month, keeps our bills paid. And then we have an annual errors and omissions fee of $199, and that covers all of your sales transactions per year. And that's literally it. There's no additional, fees like some firms maybe throw at you when you're not, didn't realize they were coming. Just a couple the last few things, and I will move it over to Jim. As far as what type of tools we offer, of course, we're going to build you your own custom broker website. We have a full CRM backend that you can use to run all sorts of marketing campaigns, email marketing, as well as some digital marketing in addition to email. We have a 6-member support team that is here in our office from 9 to 5 every day, or Monday to Friday rather. We don't leave the office. This is what we do. When the phone rings, we answer it live every time. We work for you guys. We are not out there doing our own deals. We're only here to support our brokers. Trainers, if you're interested in training as well, we have 2 full-time trainers who will meet with you one-on-one. We believe that's the best way to do training, and customize a training program, with whatever it is you're looking to do. And just a couple of last things: you'll be 100% paperless with us. We provide .loop for you, as well as we pay very quickly. Whenever you close a deal, within 3 business days, you're paid. And of course, you're never required to come to the office, although we do have 2 offices that are open 24/7. So you can come in at Tuesday at 2 a.m. if you really wanted to. The door would be open. We won't be here, we'll be sleeping, but you can always use our stuff. But you could also go your whole career never once coming to our office if you so desired. And of course, whether you're part-time or full-time, we're happy to have you. We don't have any production requirements. I've always thought that was interesting that firms did have production requirements, but of course we don't. We're really proud of this. We're certainly not people to ever brag about anything. In fact, it kind of makes us uncomfortable, but it is something that I think I should mention because only a few firms have received this in real estate. We're all, 3 of the last 4 years, we've been on the Chicago Tribune sort of top 100 places to work. That's voted on by our own employees, in this case, our brokers. So it's, something to throw out there. But anyway, we're proud of that, and hopefully we're doing a good job for our brokers, and maybe we'll make it again this year. And that's it for me. So if you want to learn more about Cael Realty, you can always contact me directly, or you can visit joincael.com. You can schedule a phone call or a in-person meeting with me. Also, you can email me or give me a call. And then lastly, we have 2 offices that are available, like I said, 24/7. One's in the city, one's out in the western suburbs. So, but again, you never have to use the offices either. All right, that is it. You sat through it. I appreciate it. And I'm going to now pull up a presentation for LoanDepot, and I'm going to introduce our speaker. So that should pull that up. And let's talk about what you came to the call today to hear, which is all about renovation loans. So I'm going to introduce Jim Lamson, who has been a loan consultant for over 20 years. He's been specializing in renovation mortgages for over 8 years. A year and a half ago, his team was asked to develop the renovation program at what was then called iMortgage, and just last week assumed the name of the parent company, LoanDepot. So if you're familiar with iMortgage, you know that the name has they've now acquired, and LoanDepot is part of that family. But just to give you an idea, LoanDepot's total production last year was $36 billion. It actually puts them as one of the 5 or 6 largest, five largest lender in the industry nationwide. So that's how big they are. They're a very, very big deal and very good at what they do. But their success has been astounding in what Jim's renovation team Midwest for FHA renovation originations. Jim's one of the few loan consultants who has actually undertaken a 203K for his own home purchase, completed it successfully, and now living in the property, which so far, he says, is still standing. I haven't seen it, but I believe him to be accurate and truthful. And also, Jim just told me he's been racing yachts for 15 years, over 15 years?
Yes.
Yeah, maybe we should just talk about yachts because I'm way more interested in that. But everyone else is interested in the renovation loan. So take it away, Jim. And by the way, when questions come up, you can just type them into the chat feature and we'll address them at the end. So thanks, Jim.
And you're going to be responsible for flicking the pages.
Yes.
Okay. I would like to thank all of you for attending, for having an interest in this. This can really be not only an exciting thing for you to get involved in, but what we can do is provide more arrows to put in your quiver. So when, in addition to increasing your commissions, you're increasing your commissions through the number of sales. And this can tremendously increase the number of transactions that you do. What can you do with a renovation loan? You can save a property that was going to go down the tubes, that you received a bad appraisal. You can help your client find a property that's acceptable to him. And I think most important, you can get into a relationship with your client that will result possibly in future transactions downstream, and more importantly, in referrals. What you're doing is you're saving time and you're saving transactions. You're saving time because your client, instead of going to 5 or 10 or 15 different homes before they find a correct home for them, you're going to be able to aim them to a property that meets their location requirements, their size requirements, and you can guide them through the process of perhaps changing the property around to meet their personal requirements as far as the property goes. You don't have to go through a client walking into the home, going through the first floor, going through the second floor. They see the pink bathroom in the second floor. They see the white metal cabinets with the red knobs in the kitchen. And they said, you know, I don't really think I like this. I think maybe we should we should see another property. So you scratch the fifth one you've taken them to off the list, and you head out towards the sixth or the seventh or the eighth property before they make a decision. To accomplish this, you need to do something in the way of a renovation mortgage for them. You're not going to change a kitchen. You're not going to have the seller of the property change the kitchen, but the buyer can change the kitchen after the loan closes through a mortgage that covers not only the purchase price of the loan, but also covers the renovation costs. It's all in one loan. It's not two loans, and you get paid when the loan closes, not when the work is finished. You can do it through several different types of programs. A couple of them are with FHA. Two of them are with Fannie Mae. They're your typical conventional loans. And we then have a third of an additional one that we just created, which is a VA renovation loan. We own it. Nobody in the business has it. So what exactly can you do with a renovation loan? As I said, you can save time going from property to property. In this particular market, the Chicago market, we have possibly one of the worst housing stocks that we've ever had in the history of the city. It requires something on the order of 2 million homes a year to be built nationwide. We've been under 1 million homes a year being built, as best I can tell, over the last 5-10 years. And the result is that when you take a client out to look at a property, that client is looking at a property that potentially has some issues that you may not even notice. What I'm going to do is, without going into the weeds on this, I'm going to give you some hints as to what to look for. More importantly, just basically how to prepare your client or prepare yourself for the fact that you may have a home that has some issues. There are also things that you can do with the homes, such as renovation like this. You can see the before kitchen, the after kitchen. It's obvious. I mean, you see a home with a 1950s kitchen, the client probably is going to want to do something about that. We can include it into the loan, which makes that home with the 1950s kitchen much more attractive if you begin to dream with your client. A number of years ago, I actually was a realtor. This was in my early youth, and I decided that work was just too hard. I would do something easy like doing mortgages. The person who owned the company, this was Prudential Preferred Properties, and this was in the mid-90s, and Doug Yeaman owned the property, and he was considered one of the best salespeople and sales trainers in the business. Doug had a magnificent training program on how to sell, but he discussed that it was important for a realtor to go through the home with the client and begin to dream with the client. You go into the kitchen and you see this 1950s kitchen with the red knobs and white metal cabinets, and you begin to think, wouldn't this look beautiful with a granite counter and some maple cabinets in it? And your client begins to sort of reinforce you, and you're reinforcing the client. And what are you doing? I said to Doug, aren't we beginning to get the client psychologically dependent on us? And he said, yes, that's exactly what you want to do if you're going to sell real estate, is get that psychological dependency from the client to you, and you can begin to guide them through the home of their dream. Here's another home that may not be their dream on the first crack. This is a kitchen. I think this picture fascinates me because I think it was a kitchen taken with some sort of a wide-angle lens, but it is one that has been torn apart by the seller and is now, on the lower picture, have been reconstructed after a renovation loan. This one is a real gem. This is one that would probably have a number of issues as far as FHA is concerned, because it's got trees ready to fall on the house, and the siding doesn't look in really good shape. But this is the same property. It's absolutely astounding to me that this is the same house. This isn't one of mine. I'm working on one right now that was in a forest like the next one. Oops, well, this is the before and after the fire. And we can take a home that's been burnt down and completely redo it. We can take an empty lot that once had a house on it. If it had a certificate of occupancy on the land, your client can buy the land and build a house on it up to whatever the maximum is. If it's a single family home, it'd be $365,000. That buys a lot of house. This one's a little bit overgrown, which turns into the next one. That is the same property built up a floor and a half, and the trees removed. I'm doing one right now in Batavia. The owner bought the house in September for $50,000. It was a 3,500 square foot limestone house just off of the river, just off of it far enough so we don't have a floodplain issue. And we had to cut down all the trees around it. It was in the middle of a beautiful forest, except the forest was keeping the land from draining, and that trees were in danger of falling on the house, and that's an absolute no-no. It's one of the few landscaping items that you can do with an FHA loan. And I've run out of, there we go. So the renovation mortgage. What can you do with a renovation mortgage? You're purchasing and refinancing a property. It includes all of the funds necessary to do the improvements required by the client or asked for by the client. The issue that you have to worry about as far as this goes is you've got to be careful of what the comps are in the immediate area. If your client is buying a $50,000 home and wants to do $200,000 worth of work on the property and to bring it up to a $250,000 mortgage, you have to be sure that the houses around that home are going to comp out. If the highest price sale in the area is $125,000 or $130,000, that deal isn't going to work. And I will have warned you well in advance what your client is looking at in terms of the work that is being done, so that you can warn the client that it might be a good idea to think a little bit smaller. When you're putting together a renovation contract, it's very important that you state on the contract where it asks for the type of mortgage, put in that it is an FHA or a conventional or a VA renovation loan. Putting in the 203K FHA is sufficient, but please get that in. It's required in the contract. Now, there are two types of FHA renovation loans. There's what's called the limited, and also the standard. What you're doing for this is you're taking your client through a home. Your client has decided, yes, I really want to put an offer in on this, but I am seeing such and such and such and such and such and such that has to be done. Or you, as the are also going through the house and you're seeing things that you know have to be done. If there's mold in the basement, that's something that has to be taken care of. If you see some plumbing issues or some leakage, those are things that you know have to be taken care of. And it's not something that you should let the client, you shouldn't let the client back away from the purchase if it's simply got mold or it's simply got leaks. We can fix them through the renovation mortgage if the client likes the location and likes the property, likes the bones of the home as it is. You're putting it in as an as-is offer. Yourself also going to probably want to have it as an as-is offer if the seller thinks there are issues. We're only dealing with one loan here. We're not dealing with a purchase loan plus a construction loan. It's a 30-year or 15-year fixed loan that covers the entire cost of the work that's being done. You can do all FHA property types. They come in, as you know, there's single family, 2-unit, 3-unit, and 4-unit. The sizes, 365,700. We often will see clients buying a home for $100,000, and they will determine that they've got enough buying power to do $200,000 worth of work. That's fine if it comps out. How do we determine how much work is being done? On an FHA loan, there's going to be a contractor involved, obviously, and there's also going to be a renovation consultant. The renovation consultant is someone who I choose. The contractor, on the other hand, is chosen by the client, but can also be suggested by you. You can refer a contractor to a client who needs one. We very rarely will permit a client to do self-help on these loans. What will happen is your client will put together a contract with you. You'll sign off on it. The contract gets accepted. And something like the next day, I get the renovation consultant out there to go through the property with the client and determine two things. Determine what FHA is going to require, and more important to all of us is, what does the client require? What does the client want done to that property? He will then put together a list, a time and materials estimate of the time and materials required to do every stage of every step of the renovation process. FHA has 35 categories in which they divide a home. Your renovation consultant is going to go through and say, okay, you want to redo the bathroom. It's 100 square feet. I guess it's a big bathroom, but it's 100 square feet. It's going to require X amount of square footage of tile for the walls. It's going to require a square footage of tile for the floors. And here's an approximate price for this area. I will work with your client and remind your client that if the client wants, for instance, marble walls in the bathroom, it costs more to put marble walls up than it does to put ceramic walls up. Your renovation consultant will also remind the client of the same sort of thing. The cost for that bathroom is going to include the time of putting the fixtures in, the tile in for the floor, the tiles in for the wall, any mirrors they may want up or anything like that, and then the time required to put those in as well as the cost of them. Your client's going to go over that line by line, sign off on it, and it's going to be given to the contractor. It's going to be given to the contractor without a time and materials estimate in dollars. It's simply going to show the quantity of materials required and the hours required. Your contractor is going to fill it in, and the contractor is going to match his numbers with the consultants, with the renovation consultant, and between the two of them, they will come up with a dollar amount that the renovation portion of the purchase is going to take. That will then become the renovation loan in its entirety. The appraiser then goes out and he's going to be doing a renovation appraisal that includes that work order that was put together by the renovation consultant. The comps in these used on completed repairs. There are two ways in which it's done. On an FHA loan, we're going to have the purchase price of the property per the contract, and we're going to have the total work order amount for the property. The appraiser will total those, and that will be the appraised value of the property. On the Fannie Mae appraisal that I'll talk about briefly, the appraiser is going to give the completed future value of the property. So your value is the value of the property is basically based on completed repairs. important for you to know is utilities do not need to be turned on and tested for one of these loans. And in fact, the water doesn't have to either. I'm dealing with one right now that has collapsed well and septic, and we don't need to have it bored out or tests done or anything like that. We have a limited 203K. The limited is up to $30,000. It's technically 35, but the 35 would be covering the consultant's consultant's fee, any permits, things like that. So it takes it up to about 35,000. Figure 31, 32,000 at the most is what the limited will do. There is no structural work permitted on that. On the standard, this is anything they want to do. The thing that can be exciting for you is you may have a 2-unit property and the client wants to duplex down the first floor unit. You can duplex down. You can build an extension onto the house. Building an extension is useful for you because you can go out, find a property in the location that your client wants that's approximately the correct size. That's all you need, the location and the size of the property. You can build anything onto it that your client wants, which means you can save a lot of time going from home to home to home if you can adequately pick that first property. VA renovation is a very exciting one that is brand new to this country. We worked with the Veterans Administration for almost a year to come up with this. It takes the regular VA loan and turns it into the equivalent of a 203K limited. We can only do $30,000 worth of work, but it's still 100% down, as is your standard VA loan. And it is the 100% down, and it is the work included within the purchase price itself. This is an absolutely wonderful program for veterans for a number of reasons. One is they're often going to homes that need work for handicap access or wheelchair access is within the home that would have to be funded out of pocket after they purchase the home. Also, your VA appraisers tend to be very, very critical. And this gets around that because when the appraiser goes through the home, if the VA appraiser finds minor things wrong with the home, we can cover it within the VA renovation. As I'm saying, we had a maximum 100%. The 35,000 once again is going to include some of the fees or permits that may be required. We'll get up to as close to 35 as we can. It's good for any property that a veteran would be able to buy. The VA guidelines are the same. Everything is the same. Loan amount up to $424,100. Now, there are a couple of things that affect you guys. We have to state in the VA contract that the purchase price is including the work that's being done. The VA requires an addendum to the accepted contract, and we've got a picture of where that would be. This is the addendum, and we have the new contract amount. Then we have the repair credit, and then we have the list of repairs. The repair credit is what is added to the purchase price, and the seller is giving that, in this case, the $30,000. The $30,000 is going as a credit at closing to the buyer. And I, as a renovation consultant, or my underwriters, or anybody from our company, is perfectly happy to explain it to the seller of the property. But it's a little peculiarity here that the Veterans Administration wanted included, and so we had to put it in, enable us to get this product off the ground. and it's now just being wonderfully received nationwide. Now, the conventional home style renovation is very similar to the FHA program. It needs a little bit more down. Instead of like FHA 3.5%, this is 5% down. We can do second homes on this one with 10% down. On the FHA loan, of course, you can only it can only be owner occupied. We can include anything. If somebody wants to build a pool and finance it into the loan, they can build the pool and we'll finance it through this. It's got high balance loan limits don't really apply to the Midwest market, but if you bump into them, we can do them. If for instance somebody was buying a home in California or the East Coast, you bump into it. If you're the realtor on it, we'll be able to do the deal. You can increase the size, footprint of the home. You can do anything you want as long as you're within the Fannie Mae guidelines, which are very similar to the FHA guidelines in terms of the dollar amount. Here's an important thing that is a potential market for you as realtors, and that is we can complete a home without a certificate of occupancy. That means if a builder has built a home and didn't finish it, ran out of money or something, and the home's on the market but it's not finished, the typical way that people buy it is they have to pay cash for it and do the work themselves. We can finance this. This is very unusual. We're able to do it. So in the Chicago market, there aren't a lot now of builders who went out of business, left homes standing, and those homes could only be purchased for cash. With this, you can pick up the home for your client. We also, on this, very exciting, have an investor purchase. So if you have investors who are buying property and fixing them up, renovating them, and selling them, we can do 15% down for an investor purchase. This is 15% of the purchase price plus the work to be done. This might interest a number of your investors who right now are paying cash for the purchase price and they're paying cash to do the work. 15% down is probably better than 100% financing. This is only for single family homes at this point. We've been trying to work with Fannie Mae. We're working with Freddie Mac to see if we can get a multifamily, but right now this is 15% down for investor purchases. Okay, benefits to you. Benefits to you are, to me, one of the really important benefits is you go through the work of putting together a contract. Everybody signs off on the contract. The appraisal is ordered. The appraiser goes out, goes through the property, comes back with the value that you want, but lo and behold, it's got $15,000 worth of subject to items that the seller has to complete prior to closing. You've got a dead deal on your hands. You get a situation like that, we can instantaneously convert this into a renovation loan. If the appraisal comes in for, let's say the appraisal comes in for $200,000 and the contract is for $200,000, but there is $10,000 worth of work that the seller will not do, we are able to go 10% over the appraised value on this property if it's an FHA. Value is very important to me is that you can work with your client, get into their mind, get into what they really want, and you can help them build the house that they want, rather than, in effect, putting a square peg into a round hole. Here's the detail of the conversion of a bad appraisal into a deal that's saved for you. The only increase is your client's going to have to pay an additional amount at the tail end because you're going to have an increased down payment. Another really interesting option for you as a realtor is to go through expired listings or go through for sale by owner properties. And if you've got a for sale by owner property that clearly needs some work, if you present to them the proposition that you could list that property for them and advertise it as renovation financing available, you might be able to get that listing. The same is true with expired listings. Many of the listings expire because the home didn't sell because it needs too much work and the seller isn't willing to pay for it. Go to the expired listing, which I think is legal in the real estate business. You go and talk to the owner of the home, and you may be able to pick up that listing once again with renovation financing available put on your listing. I would love it if it said renovation financing available through Jim Lamson at LoanDepot. That's one of the more powerful things that you can do. And now we have some questions here. We have a number of questions here.
So
so we'll start with them.
Thank you, Jim. We have a few questions. What we're going to do, some of these were probably answered along the way, but we'll try to ask them anyway. Let's see. So let's start with Geraldine asked, can you do a new build on a vacant lot? And how do you comp a new build?
You comp a new build for to match what is going on in that particular area. Let's say you have an empty lot in Portage Park, and your client wants to build a 2-unit property on it. You would look at, okay, what are the recent sales of 2-unit properties in very good condition in Portage Park, and your client would be able to go up to that amount doing an FHA. You can only do an FHA on that. But meanwhile, you're only looking at 3.5% down as well. And it's 3.5% of the purchase price plus the work to be done. There are two ways you could go about it. One is your client can pick up the lot and then do the new build on it, or your client can factor the purchase price plus the loan, the purchase price of the property plus the loan into the entire transaction. The important thing on that empty lot is there has to be some evidence that there was a house there. Typically, it would be part of a foundation that's been covered up.
Great. Mike asked, are those loan limits before or after adding in renovation costs?
Those loan limits are all the total amount. So for instance, I mentioned the house in Batavia. This fellow is doing actually $400,000 worth of renovation on the house. The loan can only go up to $365,000, so the additional funds have to be brought in. And that raises an interesting point because on all of the renovation loans, we put a contingency factor in of 10 or 15%. So for instance, on this $400,000 property, the actual work being done is really only about $360,000. If he brings the cash in, which he's going to do, the contingency funds are not spent. He can get that cash back rather than it being used to reduce the loan amount.
Now, can the borrower be the general contractor?
If the borrower has a history of being a general contractor, if the borrower has recent, within the last 6 months, references of work that he has done, and in this case, he'd have to be licensed, let's say in Chicago, he's got to be licensed and insured to do it. Typically, we strongly discourage it simply because we expect the client to be out earning the money that's going to pay for this.
Makes sense. And that was from Joe. Another question from Mike. When do payments start, at the close of the loan or when the work is completed?
Both. And that is to an extent up to the client, to an extent up to the size of the property. FHA typically requires that as long as the construction is underway, that the loan payments be escrowed. This doesn't mean that the payments start when the project's completed. It means the payments are escrowed into the mortgage itself, and we are paying the servicer, which happens to be us as well. But we are making the payments, principal, interest, taxes, and insurance every month. If the loan happens to be up at the maximum, then your client is going to start making the mortgage payments the same way they would on any other purchase. And this raises another interesting issue, and that is that we own our draw department. Very few other lenders have a draw department. It's typically sold off to one of a couple of companies in the country that do the draw work. I am working with the client throughout the entire process. If there are any issues that come up, they call me. And typically, they will call the draw department directly, but if there is an issue, or if there's an issue with their contractor, they'll give me a call.
Mike asked a good question. What happens if the work is not satisfactory to the client?
It has to be. No. What happens is, once the loan closes, and within 3 or 4 days, your client receives an email from our draw department introducing the draw department and giving them contact information and everything like that. Within about 2 weeks, the renovation consultant who put together the entire cost estimate goes out and sits down with you and with the contractor to determine how much work has been done since the loan closed. At that point, the contractor, assuming that you agree and the contractor agree, at that point the contractor is paid. He's paid because the renovation consultant sends a draw request into the draw department saying John Smith should be paid $8,000 for work to be done. The work has been done so far. That check is made out to the client and to the contractor, and the client has to sign it over to the contractor. This happens every 3 or 4 weeks throughout the process of the work being done, so that at any step along the way, if the client is unhappy, he's got complete recourse in order to, he can fire a contractor if we can rehire a new contractor. This is why we go through the stage of checking references of the contractor. If you were the contractor and the client, you'd have a difficult time firing yourself if you messed up the transaction, which is another reason that we don't really like people to do self-help on these.
Darlene asks, are investors not planning to live in the residence permitted to use any of the options?
Yes. Particularly on the Fannie Mae, an investor can purchase the property, and that would be for a single family home. An investor can purchase and do whatever he cares to do. He can either rent it out, which is probably economically the most preferable, or immediately sell it and do another one. I can actually do several of them simultaneously for the same investor. FHA requires that the home be owner occupied. If the client decides that after the work has been done and after presumably having moved in, wants to sell the property, he can. FHA would probably be, well, we know FHA will be reluctant to do a series of 203K loans for the same client who sells the property in a short period of time.
Eric asked, how much assistance is provided by you or the consultants prior to making an offer on the property?
As much as you can work out with the seller. The biggest problem we have is somebody goes through a property, they like the property, they may bring in an inspector. I strongly recommend against bringing in an inspector. I think they should bring in the renovation consultant, because the renovation consultant knows what to look for um, in terms of items that FHA specifically, or even Fannie Mae, are going to require. A regular inspector isn't really geared up to do that. If you can get the renovation consultant in going through the property, if you can get me going to go through the property, I'm perfectly willing to go through them. I have a respirator in the car, so I'm prepared for some awful ones. But as many times as you can get that client through the property without driving the seller nuts would be best, because every time you go through, you find more things that you want to add into the renovation work that's going to be done. The renovation consultant is not paid a full fee until after the contract is signed, because that can run up to, I think their maximum is $100,000. I mean, 100,000 is $1,000 now if the work being done goes over $70,000. So what we do is the consultant goes through the property at the front end for $300, and that $300 is then used as a credit against the full work that has to be done, assuming the client decides, yeah, I'm going to go ahead with this deal.
Sam asked, are there any commercial loans, like 6 units and up, available?
Not through the normal, process that all of us as loan consultants are used to. Once you go over 4 units, you're in commercial, as you said, and that would be your basic commercial construction. Or I actually have a lender who will do a commercial renovation loan based on the future cash flow, but it's going to require something on the order of 25% down. But I can put clients in touch with that person.
Mike asked, can this renovation loan be used in conjunction with first-time home buyer down payment assistance?
No. The first-time home buyer program has to be immediately sold off to, I think it gets sold to U.S. Bank in Illinois, and we have to have the loan still in our hands while the work is being done, so we cannot do first-time home buyer. However, it's 3.5% down. It's not only 3.5% down, but your client shouldn't be undertaking something like this using their last 2 shekels that they rub together. It would be best if they thought in terms of, okay, I'm doing a renovation here. There are going to be some unexpected things that I may have to pick up. Things like even light switches or something. I would strongly recommend that somebody who is getting involved in one of those programs actually go out, find the house that's in perfect condition, which is what it's designed for, and go that route.
A few more questions. John asked, is 15% down per investor just for single family, or can it be 2 to 4 units?
I wish it could be 2 to 4 units. There's an enormous market for it. We're working on it. Right now it is 15% for single family homes, and there is no product that will do that will take care of the 2, 3, and 4 units.
Marv asked, can this apply to an investor who will buy and hold for rental? I think we...
Absolutely. Yeah. And I'm a member of a group called the Urban Rehabbers, and one thing that they stress in that is it's much better to own doors than it is to flip houses. And ideally, your investor who's buying and renting is going to come right back to you to buy the next one, to buy the next one, and buy the next one.
Rita asked, you start paying after closing or after the renovation is completed?
Rita probably means, do you start paying your mortgage?
Yeah, that's my guess.
And on an FHA, we will be escrowing. On a Fannie Mae home style program, we won't be escrowing. In either case, the client is starting the first month after closing. If they close on the 15th of the month, if they close on the 15th of May, the first mortgage payment will be July 1st.
So standard.
Standard, yes.
Sarah asked, do you have to show a certain amount of funds in your bank account to qualify for renovation loan?
Okay, this is very important for you, the realtor, and that is that the way the whole process ideally works is either I refer a client to you or you refer a client to me. I'll talk to the client briefly and suggest that the client go to my website to get a pre-qualification. They go into the website, it takes them about 5 minutes to do it. I go through their credit with them, I go through their assets with them, and they receive a pre-approval for whatever you and your client decide is a satisfactory amount. If it turns into a renovation loan, fine. If it turns into just a straight FHA or a Fannie Mae loan, fine. It's the same approval. There's not a different approval.
Let's cap it there because we're bumping up against hour. We still have some additional questions. We will have Jim reach out to you directly. Thank you so much. This, quite frankly, to sustain everyone's attention for an hour, I've been doing these for years. It's never happened, so this must be pretty interesting. Jim's obviously a great presenter. We're super excited to have had him here, and obviously he knows his stuff along with LoanDepot being as popular and effective as they are. So reach out to him. His information's there on the screen. We'll be sending you guys also a thank you with a flyer as well as Jim's information. And also, this is recorded, so I'll put it up on YouTube in the next day or two. You can rewatch it. But again, please reach out to Jim directly with any additional questions. Thank you so much, Jim. Thank you for everyone who attended. I'm so glad you guys found this useful. My big fear is that people won't find the presentations that I put together useful, but it seems like this was a wild success. So that's thanks to Jim. And please give LoanDepot a try. They are certainly well worth your clients or your investors' time. So thank you, Jim.
And thank all of you for attending this and actually not even dropping off. So,
it's amazing.
Thank you very much.
All right, guys, thanks so much. And we'll be sending this out to you here shortly. Thank you.